Look, if I have to hear one more real estate agent say that we are not in an economic state of crisis and that the housing market is not going to collapse, I'm seriously going to lose my mind. I just rolled out of bed, looked at my Instagram, and of course, I happened to see another real estate agent talking about the housing market is not coming down, home prices are going up, rates are coming down, and there's going to be a flood of buyers in the market. I'm going to tell you why that is absolutely, positively not true, and how you as a new or potential real estate investor can take advantage of the market when it comes down. And my dude, that is coming. Stick around, I'm getting into it. So the first thing I want to address is, no, this is not 2008. This is much different than 2008. Now, a lot of people, and you'll hear a lot of real estate agents and even lenders kind of parroting the same thing, right? Like one person says something and then they all just kind of say the same thing, okay? And you got to look a little bit deeper on what's happening inside the US economy, because remember, interest rates and the housing market, they are significantly impacted by the financial markets, okay? So let's talk about this real quick. 2008, yes, that economic collapse was triggered due to defaults on loans, adjustable rates adjusting, bad loans being written, and all that good stuff. Okay, so this is definitely not 2008, but it doesn't mean that we are not in a economic state of crisis similar to 2008. Now I'm going to give you an example, and I'm going to just tell you real quick, when things change, they change really fast. And what happens is people will say things like, well, I was saying that because we didn't know this was going to happen. You watch, okay, over the next 12 months, people are going to say, well, we didn't know this was happening over here. We didn't take into account this. Because when the housing market moves that way, it moves fast, okay? And a lot of people don't see it coming, but right now, there are a lot of people inside the mortgage business who do see it coming, okay? And they're putting money behind it and they're betting on it, okay? I'll talk about that in a second. So here are a couple things that you need to consider. Right now, interest rates are really high, okay? And they're doing that to slow down inflation because we printed a bunch of money due to COVID and all that good stuff. So why aren't people buying houses? Well, they're not buying houses because of the interest rates. It's not the rate that's causing the problem. It's the payment that's causing the problem. If the rate was 20%, but the payment was $100, they would be buying homes. The problem is not the rate, it's tied to the affordability of the payment, and that is the big problem everyone's having. Why are they having that problem? Well, let's think about it. Credit card debt is the highest it's ever been. Defaults on those credit card debts are the highest they've ever been. Auto loans are the exact same thing. The cost of cars have considerably gone up, and the defaults on those payments are the highest they've ever been. Affordability across the US is the highest it's ever been. People just can't afford stuff. They can't afford things. And this is a big problem when you're talking about a country that lives paycheck to paycheck. Okay, a lot of politicians will say 90-something% of Americans can't put their hands on $1,000. So when things start to go bad, they start to go bad really, really stinking fast. Okay, and a lot of people are sitting on equity in their property. They won't give that up. But I will tell you that when homes go on the market and people need to liquidate, you watch how fast that happens. In 2007, my parents put their home on the market for $1.3 million. 24 months later, they sold it for $550,000. That's half of the price they had it on the market for. So I want you to consider that when things turn, they turn really stinking fast. So here's the other couple things that we need to consider. Commercial real estate has been significantly impacted. Why? Because in 2020, when COVID happened, everybody started working from home. We went to this work from home model, and nobody wants to go back into the office. They all want to stay working from home, and I don't blame them. I work from home and I absolutely love it. So the problem with that is if you own those buildings and you now don't have tenants in them, what happens? You're not cash flowing, so that creates a significant problem. But here's the thing that you got to understand. When we talk about commercial loans on these type of buildings, they are usually adjustable rate, just like 2008 when we were talking about adjustable rate mortgages in the residential space. So what we have now is a commercial real estate situation where you have people defaulting on their loans because not only are the buildings vacant, but the cost of the mortgages on those buildings have gone up, the payments have gone up, and you have a vacant building. So what happens then? So when that happens, the building owners or the people who own these properties, they hand the keys back to the bank. Now, banks are not in the business of owning properties. They're in the business of lending on those properties and securing their money by the asset itself. So when they take these back, what happens? Well, what did we see in 2008? We saw the federal government come in and bail out all the banks, okay? And if we have a situation like that going forward, the question then becomes, where does the money come from? Because we don't have any money. We just printed a ton of money, had to raise rates as a result to slow the economy down. And if we have to print more money, which by the way, we've already done, okay? Since the rates started going, we've already had to print more money. Okay, if that happens again, what does that mean for the US economy? Like, who really knows? And so when someone tells you, you should buy a house now because rates are coming down and the house prices are going up and there's gonna be all these things happening, what I can tell you without a doubt is nobody knows what the heck is gonna happen over the next 24 months. So the question then becomes, what do you do? Well, if you wanna buy a residence, if you wanna buy a property for yourself, it really comes down to a couple things. One, do you have the cash to qualify? And two, are you stable enough in your job to be able to make those payments? That's all that really matters. Can you make the payments? Yes or no? In 15 years, will that property value go up? Probably. It's very likely that it's going to go up, but a lot of things have to happen, okay? And we're seeing all these bad things happening, so you need to kind of brace for impact. And that's what I'm doing. I'm looking at the opportunities inside what may happen in the future, okay? Looking at 2008, had you gone and purchased properties in 2008, you'd probably be sitting in a very, very comfortable equity position today in those properties. So learning how to get into real estate investing is really stinking important. Learning how these hedge funds go in and they acquire these properties during these times are really important. Finding private money lenders and finding people you can partner with and knowing how to find potential deals on either on market or off market is going to be really important over the next 12 to 24 months. So again, I woke up kind of grouchy, started seeing these, I don't know what it is about these Instagram influencers who are talking about, properties going up in value and rates coming down and it's all this, sunshine and rainbows or whatever. It's just not true. We are currently in a state of a housing crisis. How do I know that? Because people can't buy houses. That's like the definition of a housing crisis. Like you can't go buy a home. So it's a little bit of a problem. So anyways, just a little bit of a rant this morning, but here's what I'd say. Make sure you have cash on hand. Make sure you don't make any big financial purchases and cut where you possibly can. Also look for other sources of earned revenue. Where can you go make money to brace for what may or may not come ahead? And these are really kind of good things that you can just operate by, generally speaking anyways. Hope you guys have an amazing rest of your week. God bless. We'll see you.